as for the rest of Uptober, right? Like I said, it's still early. We only got through the first week. So, can we still turn things around? Of course. Of course, right? We could turn things around the very last week. We could have 3 bearish weeks and bad weeks and just turn around the final week. Okay? There's always a chance. But what's happening right now is, and let me show you, what's happening right now is the whales are loading up. Reserves dropping like a rock. Okay, exchange reserves, just look at it, dropping like a rock, and it just keeps on going. It does not stop. According to this, we're basically back to 2019 levels, early 2019 levels. I mean, there are some charts that show we're like back to 2017 levels. I guess it just depends on which charts you look at, but basically the reserves, just know that exchange reserves are dropping. Okay, no matter which chart you're looking at from which company, they're all showing that reserves since 2022 have been dropping and dropping and dropping and dropping. There's no doubt about it. And why are the reserves dropping, right? Because of the giant big whales they are buying. Okay. Of course, you got MicroStrategy. Now you have BlackRock. So the realized cap for the new whales, you could see, have jumped dramatically since 2024. That's a big jump in 2024. It's almost equal to our to like an inflation chart, or equal to like, I don't know, the M2 money supply chart when the governments around the world started printing a whole lot of money. That's what it looks like. I mean, it's staggering how much Bitcoin the whales started purchasing, right? Again, look at this. New whales versus old whales. Okay, within just a year, probably what, 33, the new whales purchased about 33% as much Bitcoin as all previous old whales have purchased, if not more. I mean, it's just staggering. And that's because of the institutions, because of BlackRock and Fidelity and everyone else that start offering ETFs. And not only did they buy, but all the other institutions started buying, all the other funds and companies. And, you know, basically they have so much money and they're coming in at such a staggering pace. And most people don't realize that. Oil jumped 2%. That's never good. That's because of the ongoing war situation in the Middle East. $76 per barrel. That's quite higher than what was, I guess, in prior weeks, right? You know, whenever oil goes up, that's never a good thing. And we know that whenever oil does go up, inflation goes up, and that's never a good thing. No one wants to see that. So that's an ongoing thing. We really can't predict that. We don't know how high oil is going to get. We have seen it go as high as 110, 115 in previous, previous times. Hopefully that doesn't happen. That would be very, very bad. It's just getting started now. So I guess that's still an ongoing situation. We just don't know. As for the U.S., we do have several big things happening. FOMC minutes, that's coming up Wednesday. Inflation reading, I mentioned this in my Sunday walk video yesterday. I think that's going to be pretty big. Inflation reading, 2 of them, CPI and PPI, Thursday and Friday. Wednesday's FOMC meeting, I'm not so sure, unless something big comes out of there. Sometimes you get surprises. I don't know, like sometimes, maybe. But generally speaking, it's just a recap of what was said in the last FOMC meeting. But maybe there's like a little surprise in there that says that they're more willing to do a 50 basis point cut in the next one too, or something like that. I don't know. But you know, inflation readings are important, so that hopefully they're down. Hopefully we're not, you know, they're not artificially inflated due to the oil situation or the strikes or anything. I don't think so because those are too recent. And consumer sentiment is always important too. But as of right now, this was a big jump because we were at like 30 or 40% still up until last week. 40% chance to get a 50 basis point cut for our next FOMC meeting. Now that has changed to, man, 84%? Is that right? That is enormous. 84% chance. Am I reading that correctly? We jumped from 30, 40 to 84% chance. Now there's only a 15% chance, or is that a 25 basis point cut? I'm getting quite confused. I think we're down to 4.7. No, I think that's a 25 basis point cut. That's a 25 basis point cut. I think the 50 basis point cut is off the table now. So yeah, because we were at 5.25 down to 4.75. So we're at 4.75. And now this is saying that we're going to get basically a 25 basis point cut. 84% chance. So now I think 50 basis point is off the table. So we went from a 40% chance of a 50 basis point to a 0% chance. And now we have increased. I guess I don't know what's changed. I think the biggest thing is the jobs numbers from last week. The jobs numbers were so good that it removed that 50 basis point altogether, which is not good. Not, you know, I was looking forward to another 50 basis point cut, but hey, if we get 25 basis point, that's fine. Hopefully, what we don't want to see is like inflation ticking upwards. That would kind of just like, if we saw that, then this number is going to go down even more, and then the 15.9%, which is cut off that you don't see, will actually go up. That's what we don't want to see, right? But anyways, just to show you guys. All right, so those economic data will be somewhat important in terms of affecting this. We still have a month to go, guys. We still got a month to go, so there are a lot of factors that can still change this.